Hello, everyone. Welcome back, gold traders. Hope you are all set for another exciting week in the market. Quick note before we proceed. Pardon me as I didn't manage to drop last week's public video on this commodity due to a super tight schedule. But for those who joined the live sessions, we tracked every twist and turn together. So last week was a mix of highs and lows. Gold shot up to another record high, a little bit shy of the $2,760 area, as we saw here on Wednesday. Price tested that 2,759 area before it took a 45 or $43 dip as rising US Treasury bond yield and a stronger US dollar drove some profit taking activities from investors. But even with that pullback you see here, gold found a support ground around that $2,715 area, trading within and captured a solid 430 pips range bound structure for last week's trading session. If you are curious to review each of our entry points from last week, I will be dropping a link in the description box below just for educational purposes, of course. Um, Now let's talk about the week ahead because it's shaping up to be very much intense. Despite the recent pressure, gold still has plenty of support thanks to global tensions and economic uncertainty. Now, with the US election coming up, inflation and deficit worries is heating up concerns, especially with potential tariff shifts on the table. And let's not forget the escalating situations in the Middle East. Military action is flaring up. We just saw recently Israel striking back at Iran, and safe haven demand for gold isn't going anywhere soon based on the recent development. So, how do we approach a setup with this kind of mixed signals? We've got the strength of US Treasury bond yield and the US dollar pushing on one side, and some heavy geopolitical risk on the other side. In this video, we will cut straight to the point, breaking down the chart to identify our key level for the coming week, track the current trend, and pinpoint the structural pattern to identify trading opportunities that really count. And a quick reminder, this presentation is designed for educational purposes only. Always consult a financial advisor before making any investment decisions. So trade wisely, guys. So, all right, let's get into this chart and see what this week has in store for gold. Now, for this week, I will not be deliberating on the daily time frame. It's more like an uncharted territory, no structure to reference on that chart. So, I will be looking at the 4 hours time frame today. But before we go into that 4 hours time frame, let's dive into next week's economic calendar. You see, these scheduled dates are windows into how traders and investors are going to be positioning themselves for before and after these announcements. Now, by watching how price structures form around this event, we can get a glimpse into market psychology and spot where the big players might step in or ease off from. That's the hedge we are after, recognizing those behavioral patterns early so that we can time our own moves just right. Now, based on the assets we are monitoring for this week, we will be focusing on high impactful event from the United States economic docket. Now, the first one on the list here is coming in on Wednesday, that's October 30, and that is the labor oriented data, that is the ADP employment change, a report that provides the number of new jobs added in the United States private sector on a monthly basis. Then, on that same day, we will be looking forward to the publication of the Gross Domestic Product annualized for quarter three, a data that expressed in annual growth rates measures the total value of goods and services produced by the US economy. Now, fast forward to Thursday, October 31st, is the core personal consumption expenditure, a data that measures inflation by tracking prices of goods and services, excluding volatile food and energy costs. Now, on Friday, November 1, is the average hourly earnings, a data that measures the change in pay for workers in the United States, and it is a key indicator of inflation as well. Now, finally, sorry, it's not finally, the one before the final one is the non farm payroll, another high impactful economic event that shows how many jobs were added or lost in the US economy. So, this is one event majority will be looking forward to as it signals as a good report signals a healthy economy, which could lead to a stronger US dollar. So finally, we are looking at the highest manufacturing PMI, a key economic indicator that measures the health of the manufacturing sector in the United States. So these are the events we are looking forward to next week. And of course, the anticipation of this event, one way or the other, would have reflected on the chart as price action. Now, talking about price action, we shall be scaling down into the 4 hours time frame where I do have a simple trading setup that we are going to be using to navigate this market dynamic in the coming week. So right here on the 4 hours time frame, I took into account the character of price action in the last 2 to 3 weeks. And if we do this appropriately, you would agree with me that we are within an uptrend situation. And if we connect the series of higher lows here, we have a beautiful ascending trend line, which will be playing a significant role in guiding our trading decisions next week. And you know how we use our ascending trend lines, of course. As long as price action remains above them, we will continue to look out for patterns and structures that support the idea of buying the asset. Now, the only condition that will make us sell is if this ascending trend line is breached and broken to the downside. Now, in addition to the ascending trend line, are a couple of levels here which I would like to share with you. First of all, is our key level for this week, for the coming week, and that is situated around the 2720 area. Now, look at what has been going on here in the last 2 weeks, though we are within uncharted territory, but ever since price action tested that new record high at the 2759, as you will see here, sellers have found it difficult to break through the 2720 area. Look at what happened here a couple of weeks ago, buying platform from there. And even when sellers brought price down into this area, you can see how difficult it became for them to break through. As every point price drops in here, we see buyers come in to take over the market. And this, of course, also happened right here on Friday's trading session. Interestingly, sharing another confluence with that ascending trend line. So for me, this is an area that has a strong memory for buying power. So as a result of this, I was able to mark out a demand zone around this area. Now, since price remains above that demand zone, above the key level and the ascending trend line, I definitely want to continue looking out for patterns and structures that support the idea of buying. Now, heading into next week, the 2730 is going to be a platform we will be looking forward to see how the market will react to that area. Interestingly, it shares a confluence with that descending trend line here, which appeared to have been broken last week, as you will see here, with an engulfing bullish candle. And theoretically speaking, we do expect that when price break out of such structures, it may at some point in time come back, retest the structure in an attempt to continue the uptrend move. So I will definitely be looking forward to such retracement during the first half of next week before an uptrend scenario happen. But one thing which you'll also take into account is that it is not all the time that market follows this theoretical expectation. Instead, we could see a scenario where price will just continue its movement after forming an uptrend continuation pattern here, leading to the 2759 or even break out of that particular structure. So you would agree with me that we are at a crucial juncture at this point. We are depending on what happens around the 2745 area during the early part of next week will determine if we are going to be buying or selling this asset. And another thing I would also like to state here is for those who are considering long-term selling potentials, like I did say, I would like to see price break down the trend line, that ascending trend line, a retest of structure for confirmation before jumping into a sell. But till then, when we get there, we shall know what to do. But in the moment, we are going to be monitoring how price action will react to this 2745 area during the early hours of next week. And trust me, I will be with you in the comment section of this video to give us an update on what I think will happen after monitoring the character of price action around that particular area. So there you have it, my in-depth look at the XAUUSD for the week ahead. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. Your support means the world to me and it helps others find this content too. And if you haven't yet, consider subscribing for more insights, weekend market prep, and updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.